Okay, good Saturday evening. Let's get started with CONY. So interesting week. We closed it out. The good news is Coin is kicking butt and CONY both actually CONY's kicking more butt than Coin is. So let's go and see what they closed at on Friday. Um, we were down 6.56 in the underlying coin, and we were only down 3.45% in CONY. So we closed at 2603. All right. The good news out of this is that we aren't far from the synthetic, and they went ahead and rolled. So let's take a look. Actually, let me show you the trades. So here are the positions, and you always at the end of a week when you have a lot of expiration, these buy close, so they closed out a significant amount of positions in the weeklies. So we'll take a look at those, and then naturally they're going to sell some of their synthetics. So they rolled out of their 250s into some 260s. So you see that here, the 419 synthetics, because they had a gain, they sold 17,650, and they bought to close some additional ones right in the 250. So basically they got out of that position, and I'll show you on the sheet where the money is involved. So they were able to sell at 13.1 the 250s, expiring on 419, and then they bought the put to close at 709. So they gained $6, right, give or take 594 or 592 across all 17,000. And then they went out and went to 260s, and they bought just 17,000. So they did a buy at 27.25, and they sold short the 260 puts for 29.95. So that cost them $2.70. So that's not bad. And then they bought to close, which is beautiful here. For I don't know why they didn't just let that run all the way to a penny, to be honest, but they bought to close 16,420 of the weeklies at 257.50. But hey, I'll take a profit. I think they'd sold those at 5. And then they went out and sold some new 419 next week weeklies at 15 or at $4 at 157.70. So no need to look at that. Let's see it here. So let me take you through the synthetics. Let's take a look at, I added the 260. Let me find the 250. So here's the closing out of the on 412 of 17,650. So again, they were able to sell their calls, because when you buy a call on a synthetic, you want to sell it. And on the put, they could have gone into next week, because this $7.09 is all premium. It's actually trading under 250, right? This is the close. Let me just double check that in April. Yeah, 245.75. So this would have gone down to zero. But guess what? This would also be zero at 245. So during the day, they were able to get 13.1. So overall, what did that do? That put 10,607,000 in the CONY piggy bank. Yay, way to go, fund managers. So we're really looking good here, getting out of those. And when we went and did our new ones, and I'll go over to those, we went out to May 17th. Remember, on the synthetics, you always go, 4 to 6 weeks. And again, I'm covering CONY and MSTY, and some of these low IV companies, the Amazons and Facebooks, and some of the other ones with maybe a 35 or 40 or 45 IV and not a 90 or 130 like in MSTY, you're going to get further out potentially. All right. So we collected 10 million. I'll show you at the end on that. Let's look at our active tab. Okay. So now we set with the new 15,770 amount of contracts at 270, right? So we're at 245. My up arrow should be a down arrow, and this is actually 2603 now. So I thought I updated it, all of the different sheets, but I didn't. Okay, this is pretty flat. We didn't go anywhere on implied volatility. These should be down arrows down to 2603 and down to, I make them red when they're down, but at least I'll make them point down. And then next, maybe Monday they'll move up. All right, I'm not going to take your time to do that housekeeping. All right, so overall, excellent job. So our new going forward calls are just 1 week out, right? These are active. We already did synthetic. So we're 9.87% out of the money. These had already been written earlier in the week. So we have 500 at 262. I'm not real happy with that for 1 week out. I mean, and think if we would have, we had already written those, I think, the day before. So we have 730 out at 277.50. So they really have 5 days to make all this income. And let's take a look on the chart and see what that all looks like. And let's see how much we collected on the April, guys. I know there's a lot of data for you guys that are beginners or understanding. But what they're doing, to remind you, is they're using synthetics by buying a call and selling a put. What's the purpose of a synthetic? It's making the fund appear to own the underlying, right? They don't own any coin stock. They mimic owning it by buying a call and selling a put. That allows these, what they call single stock funds, to not have more than 25% of their funds in a single stock. Well, since it is a single stock fund, they stick most of it in the treasuries, and by buying and selling these options, they use very little of the cash. So that cash amount has to be less than 25%. So it's really a pretty ingenious methodology, right? So let's look, and that's why it's done. And then what is the weekly call? Well, they refer to that weekly call as a covered call strategy. It's a covered call strategy because it balances the synthetic long that mimics owning the underlying stock, but it's not a true covered call. I always call it a naked call because they wrote the call without owning the underlying stock. So options 101 and most people, covered call means I bought the stock and I wrote a call, right? I'm at risk of getting called out. I can always buy it back for cash and not let them take my stock if I'm in the money. But the strategy here is to collect the premiums along the way on the weeklies, and then every month or so, depending on how far out the synthetic, I make a big cash, right? But what happens when these stocks starts trending down, slightly down to more aggressively down, then you get killed on the synthetic, but you're making money along the way on the weeklies. So the weeklies are a little bit of insurance in a neutral and down environment to collect some money to be paid distributions. Because let me tell you, the first thing someone's going to tell you when you own this fund that's knows a little bit but doesn't know as much as they think they know, they're going to go, well, of course you did well in CONY. You would have done a lot better if you just bought coin. Yes, in a very bullish up move, you would do better owning coin. You wouldn't get a monthly distribution, right? So if in 6 months coin, the underlying goes up 150%, you might have only gone up 75 or 80% owning CONY, but you also got monthly distribution. So always calculate your total return. How much did I make in my distributions and how much did I make in capital gains, or if I had a capital loss, right? So these downtrending stocks, like when Tesla has one, so Tesla has been getting killed. Now, maybe it's bottoming and turning around. I'm not so sure the markets are going to support that, but more than likely Tesla will start to recover in price with their announcement of the robo, cab and some of the, without getting into that. This is Coney and Misty. I don't own any Tesla, don't own any Tesla, and don't plan to in the near term. If I see an uptrend and the markets don't roll over like I think they will, then maybe, right? I love Yeomax and what they're doing. Okay. So sorry about that rant. Let's talk about what they made and how they made it. So here are the calls. So I marked these two, right? So they had 16,420. Yeah, 16,420. Remember I kept saying this 8 million's at risk, this 8 million's at risk. Well, they did a good job. I mean, honestly, they could have brought this back for 5 cents or 1 cent at expiration, but maybe they got nervous. I'll take it. So they captured almost 7.4 out of 8, right? Call it 7.3 out of 8. So nice job, fund managers. That's healthy, right? So we're making money right and left. We made 10 million on rolling our synthetic. So I'm super bullish on Coney right now. So they're doing their job. Now let's not have a week hurt us with this, but we got a long time in our synthetics. All right. So that's what they did with these two added together. Here they picked up 138 out of 162. I don't want to minimize it. It's 545 contracts. So together they made $7,500,000, okay, on weeklies by getting out of those. All right, how are they doing? So all of these down here, they've already written these, right? They wrote a new 419 weekly on 410. They wrote one on 411. So we're counting it. Whenever they do a sale like that, you count that money, and it's only if it runs. Oh, so my point, let me go back to that synthetic and that covered call strategy that's not a real covered call on the weekly. Where do those hurt you, and why would somebody tell you, well, you should have owned the underlying coin and you would have made 150% capital gain instead of making 75% capital gain? I'm making up the numbers. And you say, well, yeah, but I got another 40% in dividend income. Yeah, but I still did better than you did. Okay, guys. This belongs in a portfolio. It's a piece of your portfolio. If you're super, super, super bullish on coin, then go buy some coin and additionally buy the Yeomax Coney, right? So one's going to pay you monthly and do pretty well, and the other's just going to do well in a capital gain strategy. So, but know that you have to have a lot more cash. You can go out and buy proxy by mimicking. You can buy coin for $26. Good luck with buying coin for $26, right? So your investment amount might be the same, okay? But it might be hard. You might be buying 3 or 4 shares if you have a small thing. So I think getting paid, there's a good feeling about that. I'm not saying it's a better strategy. I'm just saying it belongs in your portfolio. So I'm trying to educate you on the pluses and minuses. And listen, never chase yield. Don't run out and buy Misty because you want $4 a month, because there's no guarantee that's going to happen. If you're bullish on MicroStrategy and you think it's going to really run, then by all means buy Misty. Right now, I tend to be in a wait and see, but I think the NASDAQ and the Dow could be topping here and may trend down, and maybe the bigger part of the 15% doesn't happen until September. Again, my humble opinion, right? I'm watching. I'm certainly not wanting to put a huge amount of money in NVIDIA and in some of these other stocks that I see the economy deteriorating, right? All right, so again, enough on that rant. Let's go back and look at our cash. I told you about the 8 million, the 162. So we captured 7.4 there. Look at this new call. All right, we're 9.87% out of the money. So remember, the last time we had an 8 million. This time we got a 6 million, and then we put on. That's all we put on. Okay, so 6.3 there, but collectively we have over 7 million, right? That's yet to be determined. These don't have a close price because they're 419, right? So we're doing really, really well here in this. All right. So let's look. I showed you active. And this just summarizes how far out of the money we are, right? And what is our total count? They're all 1 week. So I didn't sum this up. So we stand to gain more money, right? We got another 2 something. I don't know if I updated these caps. So let me tell you that, which reminds me of telling you something that relates to the cap. So we had this synthetic, and then Yilmax will refer to the weeklies as a covered call strategy, almost a covered call strategy against the synthetic, because the synthetic is such a bullish bet both ways. Selling the puts, you don't want to be way under the puts, or it's going to cost you a lot of money to buy it back, which is what Misty finds itself in when I go into that next with 1 week left. CONY was doing so well that they rolled out of theirs. Now they don't really have to worry till, I think, May 17th. I'll check the date on the synthetic for you. Let's look at the new synthetic 260. Yeah, 517. Now, technically, I don't like the way they updated. They sold this for 27 and they had a liability of 29 and they gave a closing price of 23. I don't know that that's really accurate. But the point is, this is showing they could lose, that they're behind 11 million. I don't even worry about those numbers when we're out to 517, right? The fact that we're below, I could see that this is skewed a little bit. When they wrote those calls, it was probably closer to 250. So don't worry about a synthetic that's so far out. They actually, when they sold it for $29.95 and they bought it $27.25, right? So they actually put 4.59 in the kitty. So as long as they get beyond 260 when they're in, and remember that's past the halving, and coin for Coinbase is really like I relate it in the gold rush to the pick and shovel. They're the general store selling all the supplies for the gold miners. So in this case, for the bit miners and for all the people that are buying coins and crypto and Bitcoin, the exchange with all of the Sam Brinkman and the Genesis and the whatever his company, FX, all of that stuff, Coinbase is heavily regulated. It is the go-to legitimate exchange for buying any kind of crypto. So that's why I love them. They're making money. I have friends working there. I hear how well they're doing. So I'm very bullish on Coin. Okay, so let's go to, make sure I covered everything. Yeah, let's go to our holdings. All right, so yeah, we show this $11 million delta, right? I organized everything together. So we went down 250,000 shares. Not a big deal. It's been trending down. The people that are selling out are going, it's trending down. They're not looking at these internals, guys. That's why it's so important to do this kind of stuff and analyze what's really going on with the fund and what's our probability of having a good payday, right? So we closed at 2603. It's saying that we're priced with a premium, right? They're saying it's worth $25.90 here on their net assets. When I added up the assets, I came to a lower number, but I'll just go back to their number. So I had this higher, but it's just easier to use their numbers. So we're down 1.53%. Just to give you a heads up, CONY or Misty was flat. You'll see that. All right, so here's our 3 calls, right? And we stand to make about 4.3 million on those next week if we close below all these strike prices. So we're at 245. It's very possible. 262. We'll certainly close below it on these guys. Well, I say certainly, right? 245, you got to have a big up week. We need it in Misty, but I don't really want it in Coney. But anyway, we're looking good. Let's actually look at the payment. How does that translate here? Okay. So look at where these numbers have jumped up to, right? We collected the 10 million in the synthetic. So we've jumped up to 14,822, right? So 14.8 million. Look at that shortfall income by getting that, 8+ million. So our net income is 29 million. We're at 1650 shares. So total income per share, if they paid tomorrow, eligible monies is $1.83, right? And 90 cents of that is coming from the weeklies. So if we throw another 7 million at that sends this to $1.35 just on the short call income, and we would be at 419. We would have 2 weeks left before declaration. So, Coney is looking really good in my opinion, better than Misty, and I'll tell you why. So this is looking like a $2. It's early. Don't hold me to it, right? They also held back, $50 million, which represents 3.61. So this could have, if it continued and did really well, on the synthetic over time and still did really good on the weeklies, we could have a $4 payout here. Who knows, guys? Not projecting that. All right, so much for that. Let me pull over Misty. Now I gotta find where I have the Misty trades. Well, let me just jump into them because I really don't have to do it that way. Let's go over to our synthetic. We didn't roll a synthetic, okay? So we're still sitting with 567 contracts. They still expire next week. What's our liability and where do we stand? We're 12 million in the hole. So I'm going to show you that later when we look at the cash and see how big of a hit that could be. Now, and then we'll talk about the weeklies and tell you where ideally this thing could go. So you never like it when you have a week to go and you're at 1479 and you really want to be at 1700. Because guess what, guys? If you get to 1700, this goes to zero, right? That's the magic way to get this. Right now, this should be without time premium. You can't remove it when you have a week left, but just based on the other math, the actual 17 minus 1479 would give us 221, right? 220.5. So there's $27 of time premium here. But guess what? They're giving us a value of 30 on the call, and look, it has no value, right? If it doesn't go, even at 1700, this goes to zero, and at 1700, this goes to zero, right? But that would knock this thing way down, right? We have to go back and look at what, our average price is and all that stuff. But you do not want to lose 12 million on the synthetic. So let's go, Misty. All right. What did they do in adding, right? So they came out and they added, let's go to the April tab and we'll see it. Oh, and I didn't tell you what they did in numbers. Sorry, guys. I'm frustrated with the synthetic that we performed so poorly. Okay, down 4.65 on the day, right? 1479. Now, what did that do for us? That even made us collect full premium. Well, actually not full premium, but close to it on the 1530. We're only talking about 2.13 million. But look at this 1.2 and 6.8, right? We went down here and we collected those. Honestly, why on earth would you close a 1920 that you're nowhere near with anything but a penny? But all right, they had to pay 1560, and so they didn't collect 689, they collected 687. You can't squabble here, right? They left a little money on the table for the other side. All right. So on this 465 down, we only moved down 392, right? Again, when your buddy tells you, oh, well, I own coin and you don't perform as well as I do. Well, how many times when there's a flat to a slight down, you're making money on those weeklies? That's why they call them a covered call strategy. But technically, they're not covered calls. If you tried to go out and write that call without owning the underlying, it's called a naked call, and you have to have tremendous margin to do that. They have to have tremendous margin to do it, but I understand why they call it a covered call strategy and can't argue with that. All right, so here, these are the 545 that they put on. They used 1670. They went out 1287 out of the money, which is nice. That's reasonable. But if we need, I'll have to figure what 12 or 13% in MSTY, would that get it to the level it needs to? It certainly would help, right, to abate that 12 million in the hole. Okay, so 1.9 million they collected here. Let's talk about what all they collected up here, right? So they wrote this call and put that money. So we look good because we're not yet showing that 13 million loss, right? If we have to roll out of it and take that loss and we have to spend the 13 million, then you'll see us, our spreadsheet be hurt in the payments, right? All right, so we collected 687, we collected 1.2 million. Look at this, we collected pretty much 98% of all this money, right? This is probably the one that 1530, I wasn't expecting us to make money, right? But we did. We collected $25. So we collected 184 out of 213. So good job on fund managers, really. I mean, you just executed what was in front of you, but I'll give you credit. All right. So now I can look at the active tab and say, what do we have? We had the 22 we'd already written. We're 10.5 out of the money. And on these guys, we're 12.87 out of the money. So what is that? What can that do for us? Well, that capping isn't relevant yet. We have to run a whole bunch to get past those before we're ever capped. So right now we can get $4.54. So we could get MSTY to almost $40. Well, we would get them to $40 if we made all that money, right? But we're not going to make all that money without losing on the synthetic, right? Because in order to get to the synthetic, we got to run to 1700. So when we run to 1700, we're going to lose some here. Let's go back and look at that. So what did we write those for? Well, we wrote them for $35, so that really kind of covers us to 1704. So I know this is complicated, guys, but once you sink in, what I would wish for on MSTY is they get up near 1700, right? If they close at 1690, 1695 on the final day, then they're going to make all this money. They're going to make 1.9 million, right? Well, I take it back. 1670, they start dwindling it back. At 1704, it's break even. They give the 1.9 back and they don't. So 1670 would be awesome, right? So you close at 1670 and your put's only $30 liability, and right now it's a $249 liability, right? 247. So that would go to 30. When you multiply 30 times here, you're only losing like 1.5, and this would go to 0, right? So you'd probably have a $2 or $3 million loss, but you would kick butt in the weekly. So you have to understand there's give and take here. But you'd never like to be in a situation with 1 week to go. So remember I was talking about percentage? So if I took 12% of 1479, right, that's going to take me, let's do it right here, equals this times 1.12. 1657. It's right in the realm. So we could have a 12 or 15% run here, get our $12 million loss down to a $2 million loss, and then we're going to roll into a new position, right? So that's not bad, and I'll show you on the tab. And then on our actives, this one would lose a little bit. It's only 22 contracts. So this guy wouldn't lose much running up, right? On the math on this other one. Yeah, I got us at 1657. We'd lose a little bit. Let's go to our Aprils. Yeah, we wouldn't lose anything on this guy. We would get the 1.9, and that's probably, we'll probably have to spend between 1.9 and 2.9 to get out of that position if we ran up to 1670. So this would pay for us getting out of that, and then we would lose this. Well, we wouldn't lose all of it because we got 56. We got a nice amount. So we would collect a little bit of this. So all in all, there's a strategy, guys. If you want to wish for something, now you can take your math to the nth degree and wish intelligently. All right, let's go take a look at holdings. So here's the 12-something million, 12.3 million in the hole, right? Our treasuries and cash, who cares for the moment? And here's our positions, right? So we can make this 1.9 million or close to it. We just need to move up to the 1657 area here, guys. And let me show you in our payments. Okay. So we look good on paper, right? Because we've been selling these calls, and then we captured more profits in calls, and we got another 2 million that's shown in here that we haven't really captured yet, right? And of course we're showing 2.3 million in synthetic, but if it closed tomorrow at these prices, we'd have a 12.3 million, right? So you'd see minus 10 million here and 4 million here. So you would have a 6 million negative net income, right? Remember, the way these credits and debits, we show a negative, which is really positive. I know it's strange, but that's accounting for you. So right now, we got $2.65 in total income, and $1.73 of it is the short weeklies. So we want to avoid, and look at this, now you see sometimes why these funds are conservative, right? Everybody wanted a $6, $7 payout. Hell, they had 8.7 million they could have paid out, right? But they would have had no reserve, right? So we had that reserve. We're setting on 265 to pay out now. So if we can avoid that $13 million, $12.3 million loss and get it down to 2 or 3 million and continue to keep the 2 million, we're looking pretty good going forward then. And having, just an FYI for you, having is not a having in the way you think of it. It just means that they own, they've already issued 19.6 out of 21 something million coins that'll ever be mined. They just only mine at a rate of half of what they were doing. So that extends over time. That remaining 1.8 million, whatever the math is, 21 something minus 19 something, right? So let's call it 1.5 million coins to be mined, right? So they're mining at a certain rate now, so they cut that in half. In 4 more years, they're going to cut it in half. But you're talking about a minuscule amount, so it's a supply and demand issue. The real expected growth, okay, in Bitcoin happens after the mining traditionally, okay? So we may well take a loss. The odds are we'll take a loss. But if we can get it down from 12.3 to 1 million, 2 million, we would still be looking really sweet here and in the ballpark for a 3 or 4 million, or $3 or $4 distribution. Okay, guys, hope I didn't bore you with too much details. I just get excited about the math, and I want you to learn with me how these things work. So when, don't just be a yield chaser. Know what you own. Okay, guys. Again, this is for fun and education. I'm not a financial advisor, and this is not financial advice. See ya. Have a great rest of your weekend.